प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Wonderful Wednesday on Dalal Street as Sensex reclaims the 60,000 mark, Nifty above 17,900, banking, metal stocks gain, IT companies drag. Blow to Videocon's insolvency proceedings. NCLT set aside NCLT order selling the company to Vedanta subsidiary. Big win for lenders who had appealed against the low price. Big win for Future Group. Delhi High Court stays Singapore Tribunal proceedings in the Amazon case. Hearing to continue from the 1st of February. Jet Airways loses its pilot even before takeoff. Interim CEO Sudhir Gaur resigns. Reason behind his sudden departure remains unknown. Markets continue to trade positive for a fourth straight session. Sensex rallying over 360 points to sit atop Mount 60,000 once again. Nifty too gaining 120 points, shutting shop just shy of that 18,000 mark. Sectorally, Nifty Bank and Financial Services led the rally today. Bajaj Twins gaining over 4% each. Kotak Mahindra Bank, JSW Steel and Grasim some of the other gainers in trade. But it was the worst day in 2 weeks for the IT sector. IT stocks from the likes of Tech Mahindra, Infosys, HCL and Wipro succumbed to selling pressure as investors geared up for the onset of the quarterly earnings season. The broader markets, however, underperformed the headline indices with small caps declining. The dark clouds of Omicron have cast a shadow over traditional presentation and surrounding events of the forthcoming union budget that's set to be presented on Feb 1st by Finance Minister Nirmala Sitharaman. For the second consecutive year since 1947, the voluminous budget documents are unlikely to be printed for mass circulation. Members of Parliament, the media and other stakeholders will only get soft copies of the budget and economic survey documents. The iconic Halwa ceremony will also be downscaled to a bare minimum, as was the case in 2021. Karishma Asudani joining us for more on this. Karishma, how is Omicron impacting the entire budget preparation exercise and its presentation?
Well, right, Abha, this is going to be the new kind of budget, and this kind of was also seen last year in the 2021-2022. While it's a bit early to predict, like sources are hinting that each day there's a new development with the new variant. Though it's early, but it's for sure that this is going to be the second consecutive year that government is going to cut down on printing the mega budget document, which usually has been the traditional norm with Finance Minister Nirmala Sitharaman carrying it in a Bhai Kata on the day of budget in the morning before she presents it in the parliament. So this is not going to happen, and rather soft copies will be given to MPs. In fact, for public also is going to be uploaded on the website, and a budget app, which was also introduced last year, will be taken up. Now, when it comes to the presentation and interactions with the media, there's going to be a press conference post the budget presentation, followed by, of course, a lot of industry interactions, which yet need confirmations on how they'll be held. So while definitely budget is expected to be presented on Feb 1st, 2022, but this surge in the new cases and, of course, likely a third wave nationwide that is being seen will make certain changes and impact on the plans that government had already set in, especially that Finance Minister has now also completed the stakeholder consultations. About 7 to 8 pre-budget stakeholder consultations have been completed last month, where various industry representations, stakeholders, trade bodies, capital market representatives and state finance ministers were part of it.
All right, Karishma, thanks so much for that. Now, automakers reported a mixed set of numbers on the back of high ownership cost and also poor rural sentiment. As per FADA, the vehicle retail sales decreased by 16% in December. The worst hit was the two-wheeler market, which logged in a 20% fall in sales on the back of Omicron fears and poor rural demand. Passenger vehicles continue to face the brunt of semiconductor shortage, with sales falling 11%. On the other hand, commercial vehicle retail was up 14%. According to FADA, with Omicron likely to peak in February, the new-term outlook is cautious. My colleague Chetan Bhutani had a word with the FADA president, Vinkesh Gulati. Listen in.
Now, what is the impact of the Omicron variant you're seeing right now? Because considering the past 4-5 days has been really hectic with respect to the rising cases, what is the plan and how are you foreseeing the impact?
So thanks, Chetan, for having me in the show. So overall, it's too early to comment on that because it's just been a week where we have started seeing numbers crossing such high, and practically it's still not affected all states. So UP just came with an order. Uttar Pradesh yesterday, Haryana 2 days back. Delhi and Bombay was obviously the front runners and starting restrictions. So it's still to actually show the effect what will happen. But what we have seen in the last week or last 3-4 days is a reduction in walk-in inquiries. So physical inquiries are going down, but the overall inquiries are same. So people have now again resorted to telecalls and WhatsApp calls and video calls and all the digital things what we had started post the first lockdown in the April, May last year. So things are going back to those pattern, but overall a negative effect because of Omicron or any Delta variant is still not being seen on the ground, but it's too early to comment on that.
In a major setback for e-commerce major Amazon, Delhi High Court has stayed Amazon's arbitration proceedings in Singapore Tribunal against Future Group till February 1st. The division bench passed the interim order in an appeal filed by Future. The court noted that the Competition Commission order against Amazon prima facie was in favor of Future. This comes after a single-judge bench dismissed Future Group petitions yesterday seeking to end the Amazon arbitration. Here's what else is making news in the corporate world. Skill-based casual gaming company Zoopy has announced a strategic partnership with Reliance Jio. As per the agreement, Zoopy products will be integrated in Jio handsets, which will reach Jio's established 450 million user base. The partnership will mean that Jio customers will now have access to all Zoopy games and mobile applications. In a big blow to Jet Airways as it readies for takeoff again, interim CEO Captain Sudhir Gaur has resigned. The reasons behind his sudden departure from the company are not yet known. Jet Airways Monitoring Committee is likely to meet this week to review certain key appointments. The committee will take a decision on appointing senior executives and CEOs. Sanjay Bhargava, the head of Elon Musk-led Starlink's India operations, has resigned. Bhargava's sudden exit comes weeks after the government warned that Starlink Internet Services is not licensed to offer satellite-based internet services in India. You're with us here on Ask Udayan, the show where we take all your stock-specific queries and our global business editor, Udayan Mukherjee, answers a select few every Wednesday. Do continue to keep them coming on that number on your screen, and you'll have your chance to ask your question to Udayan. Let's kick off with our first query today, coming in from Dr. Rakesh Kumar Nayak. He's from Bhubaneswar. Dr. Nayak, go ahead, ask your question.
Hi sir, this is Rakesh calling from Bhubaneswar. I want to hold Apollo Hospital share for a very long time and want to continue as a long-term shareholder of this. Kindly tell me the levels and review, and I want to really invest big on this.
Okay. Well, it's interesting that you're talking about long-term investment in Apollo Hospitals because, it is one stock which has really tested the patience of investors. I mean, if you look at 2015 to 2020, the stock just moved in a narrow band of 1,000 to 1,500. It made no money for investors. It was flat for 5 long years. And COVID suddenly changed everything for that stock, because people started appreciating that Apollo hospitals could actually operate with good operating margins. It could actually have a return on equity of around 20% plus. And the stock has moved to 5,000. It moved to 6,000 actually from 1,500, and now around 5,000 and change. So, it has already gone up 4 times or 3.5, 4 times in the last year or so. But I still think there is a lot of interest in hospital stocks because, as I said, there is every possibility that Apollo will go on to make a return on equity of in excess of 20-22% in 2023. It's been a long time coming, but we are probably there. And the combination of its businesses, from pharmacies to hospitals to the digital part, they all seem to be firing okay. Realizations per bed have been moving higher. And as COVID fades and we see the international medical tourism business improving as well, I think Apollo could do well once again. Now, the question is it the best hospital stock to own? That could be debatable, but all hospital stocks have done well. I mean, you look at Max, you look at Fortis, you look at Narayana and Apollo. They've all actually done well over the last couple of years. So you could, instead of buying one of them, you could buy a basket of these hospital stocks and hold them. I think the chances of success may be even higher, but it's a good space to be betting on. I agree with you.
Okay, Rajesh Kateja has also sent in his query from Mumbai and he's looking at GIC. Go ahead, Rajesh.
Hi, my name is Rajesh and I'm calling in from Mumbai. I wanted your advice on General Insurance Corporation of India. The stock has corrected 70% from its IPO price. Do you think it's a hold or a sell? Thank you.
Well, it's not for me to give you stock recommendations like that, but I'm no fan of GIC. I mean, since you have been following the company, that it's in the business of reinsurance. It's been a couple of difficult years for reinsurers because there have been so many catastrophes across the world. Also, the premium growth has not been anything to write home about. So if you want exposure to the insurance segment, I'm not sure GIC, despite a 70% fall in the stock price, is the best way to look at it. I think there are interesting insurance companies which are listed both in general and in life insurance. So, you could look at names like HDFC Life or ICICI Prudential Life or SBI Life in life. You could look at ICICI Lombard, which is a high-class general insurance companies. None of these have actually run away along with the market. In fact, I would say that their performance has been quite muted over the last 1 year. So they are not trading at runaway valuations. So if you need exposure to insurance, I would recommend that you look at some of the private names in life and general insurance, some of the ones which I mentioned, and probably give the PSU reinsurer that you have in mind, GIC, a pass.
Okay, here's an interesting one. On a recent listing, we've actually got a query coming in on Cartridge. Listen.
Hi Udayan, I'm Hemant Agarwal from Hyderabad. I'm holding 1500 shares of Cartridge and my buying price is 1500 rupees. Should I average it or sell it? Thank you.
Oops, this one is a tough one. You've bought at the peak right after listing and the stock has lost what, 40%, 50% since then. My commiserations. It's a difficult one and it's never a good feeling when you buy and immediately after that the stock tanks like Cartridge has. It's an interesting enough business, this online automobile sales business. The used car market is also going to be quite significant in the years to come. So there's no problem as such. The thing is, of course, the starting valuations were very high where you bought. That is part of the problem. Also, the market is quite competitive. You have other players like Cars24 and Car Dekho, where you can see all those ads playing on television all the time. These are well capitalized players, all of them, like Cartridge. So they have raised private equity capital. And I think they will probably battle it out, slug it out in that market for a couple of years to come. Usually, too many players in a digital space do not succeed in making a lot of money. One of them will, maybe a second one will survive, but not all of them. So the market is not totally sure which of these companies comes out on top a couple of years down the line. And that seems to be a little bit of a problem. Also, the good thing I like about Cartridge is it's not one of those companies which are making huge losses. It's actually going to be profitable this year unless something goes wrong. But trading at 60p, I find there is greater comfort in other names like, say, Info Edge or India Mart. I think these have better business models, and probably if you have to pay this kind of P multiple, you could be looking at some of those names rather.
All right, we have time for one more query. Colonel Malik has sent in his question from Nagpur, and this is on HDFC AMC. Let's listen in.
Hi Udyan, good evening. I am Colonel V. Malik. I am holding 100 shares of HDFC AMC at the rate of 1900. This share went up to 3900, but thereafter it's continuously falling. Should I hold or sell? I am a long-term investor. I also want to know the absolute value of this scrip.
I wanted to say that this is stock is at least trading above your purchase price and quite a bit above that, though it's corrected significantly from the top for the year. So you need not be in as much discomfort as some HDFC AMC investors would be. But I take your point. I mean, the stock is down 20% this year. It's not kept pace with the market. And it is something which a lot of people own because the name HDFC comes with a certain kind of pedigree, and it's a good management, and therefore people want to own stocks from the HDFC fold, long-term investors like you particularly. The problem with HDFC AMC is that given that it's a fairly secular kind of growth business, it has been losing market share quite steadily over the years. Even this year, I think it will end up losing market share. I think the problem is not of the quality of the business. I think the problem is one of dynamism. It's does, on the NFO front, where some of its competitors have done much better on launching ETFs or international funds, they seem to be lagging some of their peers, which is why their market share has been going down. And I think it is for this reason that this steady erosion of share, which investors or the stock market has been quite worried about. So I think there is a challenge. I mean, you can't keep on growing at 13 to 15% and ask investors to pay you 35 or 40 PE multiple in a secular industry like asset management. So I think the management will have to prove that they can do better. And if they do, then I think in the long term, you'll make steady returns from HDFC asset management. But is it the best financial services stock you can own? My answer would be no. There are probably better stock market or capital market proxy plays you could be looking at, though they may not be asset management plays, but there could be better plays to be looking at there.
Then talking about AMCs, for those investors who want to allocate towards a mutual fund whose risk profile is probably a little less, would you suggest, looking at a diversified fund, a balanced fund, an index fund? I mean, there's so many words that are being thrown around at the moment. There's been a phase where index funds have been really popular. There's been a phase where, we've got the small cap or mid cap baskets that are starting to see momentum. What would be a wise choice?
Abha, I think of all the names that you mentioned, I think it should be probably all of them, because I always say that one should have a cluster of mutual funds and not bet on just one or two, because ETFs actually end up beating many of the diversified funds that you mentioned on many years. So I don't think you should scoff at ETFs. They're excellent, low cost ways to participate in the market. So if I had 100 rupees to allocate in mutual funds, the way I would do it probably is to say, let me put 20 rupees in a vanilla ETF. There are many of them floating around. Just buy a Nifty ETF. Maybe 20 rupees goes in there where you don't want to take risk. 20 rupees goes this year, since we were talking about the volatility expectations for this year. You do something like, which is a dynamic asset allocation fund. I think one NFO is open right now from ICICI, but there are many in the market. Basically, they take the call of, depending on valuation levels, whether the money should be in equity, debt, gold, or international equity. And they keep switching around with the asset allocation themselves. And those are useful things to have in a volatile year. So you could put 20 rupees there as well. The remaining, I think I would put in high quality diversified equity funds. So you could choose from the likes of, I invest in some of these mutual funds myself over years. Something like an Axis Blue Chip Fund, something like a PGIM FlexiCap Fund, even the Parag Parekh FlexiCap Fund, which invests nearly 1/3 of its portfolio in international stocks like Apple and Google. So you get the international flavor as well. So these are some names, and they have very good track records over many years. So you could consider some of these. But if you do, say, 5 or 6 of these funds and keep topping them up regularly, I think the chances of long-term appreciation of capital are pretty high. So maybe diversify a little bit and buy a basket of mutual funds. That would be my suggestion.
All right, there you have it, some wise advice on how to look at mutual funds, especially if you're looking at them for the first time as well. Udayan, thanks for taking all those queries today. And if you'd like to have your query answered by Udayan, simply write into us or send in your query on the number on your screen. Thanks so much for watching. That's all from us for now.